Hello everyone, welcome again to this channel. If you haven't subscribed, you should subscribe to Hybrid Accounts. It gives a lot of videos, very useful in an understandable way. All right, now let's take a look at operating activities, the direct method, using direct method. So this is the direct method Proforma. What is a direct method Proforma for actually operating activities? This is what we do. Now, to understand me well, let me prepare something very essential for you. Let's just take a look at this one. You know, just come from the income statement. Now, from the income statement, you would recognize the following. First of all, the income statement would have revenue. Then after revenue, it will have cost of sales. Sales are we usually obtain gross profit. And then after gross profit, we usually have operating expenses. Operating expenses. And after operating expenses, then I could have the rest. You could have maybe non-operating income, let's say non-operating, let's say income, non-operating, let's say, you could have non-operating income and expenses. It really depends on the situation. And after this, I could have the rest, let's say non-operating income and expenses. For example, all right, I could say this. Let's say non-operating income and expenses. For example, let me write here maybe finance cost or interest. Finance cost. And after finance cost, you will have profit before tax, after which you will deduct tax to arrive at profit after tax or profit for the year. So you have to move from this basis to know what we do here. As I told you earlier in the previous video, when speaking of the direct method, that means we move from top to bottom. You move from revenue and down here all the way to other comprehensive income if it is there. So you look at this figure here, revenue. You look, what do you obtain to what cash do you expect to obtain from revenue? We expect to be paid by customers. So here we come, we say cash received from customers, and you are done. How do you obtain this? We'll see in an example actually. To obtain cash received from customers, we usually prepare the trade receivables control account, which we'll see very shortly. And then you have cash paid to suppliers. How did I write cash paid to suppliers? We just come down here, cost of sales. Cost of sales means that I've incurred some cost to sell goods. That if I've incurred some cost, that means that I could have paid something to suppliers. So that's why we say cash paid to suppliers. This gross profit, this is just the difference, and it's not over, just going down, so just ignore it. And then we have operating expenses. You know, operating expenses could include let's say distribution costs, administration expenses, which we usually also have to know how much cash you have paid for distribution costs or administration expenses. That's why we say cash paid to employees and other expenses. Those are just operating expenses. Now you have to note one thing. When speaking of operating expenses, there will be operating expenses that are of a non-cash nature. They will non-cash, for example, depreciation. Non-cash expenses of a non-cash nature actually won't appear here because that will be none of our business right here. It's not like you are adjusting the profit. No, we just need the cash. So we won't obtain any cash from non-operating expenses. So as for direct method, you just ignore everything. After that, you could have down here non-operating income. Now, non-operating income, you have been told non-operating. So if it's non-operating, that means that it won't be involved at all when dealing the direct method. Now, after that, what came down here? We are told finance cost. Finance cost, a nice example, finance cost is an interest expense. So down here, we have deducted interest expense. But if you ask yourself, well, interest expense comes as a result of being financed. Someone financed us. You get me? Someone financed us. After someone having financed us, that means that we have to pay them. So it's actually a financing activity. That's why interest paid can also be shown under financing activities. But it's just common to put interest paid down under operating activities. It's just actually a practice. And if you do this, if an entity does this, it has to do this actually consistently, so as to reflect comparability of the financial statements. So interest paid can usually be deducted over here. Interest paid, that means this is the cash outflow or finance cost paid. Then after that, you would arrive at profit, you would arrive at this figure, profit before tax, which you already started. So just come down here and you'll find out tax. So you also deduct tax paid. And usually we'll see how to obtain all these figures here. I'm just trying to illustrate to you that you do not have to claim. Everything is down here at the income statement. You take a look at your income statement and everything will become very, very much easier. So it's just like that. I hope you got me very, very well. And I think we can proceed. So this is how you deal with the direct method. This is the proforma. This is how the proforma for direct method is arrived at. And then now you have the indirect method proforma. Now to proceed well, I just advise you to go to the next video so that I take a look at this.